warm welcome to Vishal Gurbuxani.
Thanks. So I wanted to make it super interactive. So I think from our discussions, we wanted to kind of save the questions till the end. I wanted to make this more just kind of a journey. So it may seem small, but what I've really tried to articulate is, what it takes to kind of get to a point of where you feel your passion, you get successful, and also just more importantly, get inspired. Because that's kind of the whole kind of goal of the conversation.
Yay!
That's my niece.
She's happy.
So, where did it start? So it started in 1998. There was a company called Shasta Networks. Basically, back in the day, in the 1998s, telecom was the big thing, right? It's Nortel, Cisco were the big juggernauts. And right when I got my first job, which was doing QA testing in 1998, within a month of doing that, I basically talked to my boss at the time, and I was like, testing, this is great and all, but there has to be something more exciting. Every night, my manager would literally get emailed 40 to 50 bugs, and he would spend the next 2 hours correlating all of this information, and then giving that to his boss, then figuring out if that should then be submitted to the next version. I literally talked to him, like, there has to be a better way. So that was kind of the culminations of like the first thing that I got really inspired about. And it's really finding a mentor that believes in you. He basically was like, all right, if you can do something better, go for it. So he gave me the tools. I didn't know anything about database programming or anything about web server creation. He gave me pretty much a budget, and he was like, go at it. And then from that point on, I created something that the entire company started using. At that time, it was essentially a website that took in all the different product features. I mean, now we have Jira, we have all these other interesting product tools, but before that, 1998, there was nothing. So we started using that, and then fast forward to 1999, which is basically a year later, Nortel acquires it for $450 million. And then right above us, there was a company called My Assignment, if you guys remember, and that got acquired for $820 million. So I was shocked that a software company that was purely software, not hardware, got acquired for double the price. So then after that, you fast forward to 2000, got the first taste of what it means to be in a big company. The company moved from like 40 people to now, Nortel at that time was hundreds, like about 1,000 something people, primarily in Canada and also in Santa Clara. And you quickly realize, from a startup where every day is like blood and sweat and tears, to like on-demand massages, breakfast, lunch, and dinner taken care of. Everyone has like doing option trading in the morning, playing margins, and you're like, wow, this is just ridiculous. Like you can't. The extreme was just incredible. Then in 2001, the same core team that started Shasta went to go start on Diamo. So I went there, and then 2002, Cisco acquired them. So within the span of 4 years, 2 big acquisitions happened, and all you basically can see is just nothing but, wow, this is like everyone's dream. You're like, okay, you start something, everyone's passionate, everyone's having a good time, you're working really hard. There's no boundaries between work life and family life. All you do in the morning is you get into work, and you're literally there to like post dinner, like midnight, whatever, and everyone thinks that at that time, all the sacrifices is worth it because everyone was checking in the morning their stock, their price, their value, their bank accounts. And then of course you fast forward to 2002, then you have like the worst crash of all time. And everyone that basically were playing margins lost probably 80 to 90% of their worth. I had personal friends who went through divorces. I had friends that were my mentors, all just moved back to their respective countries. And it was actually very brutal. To go into job fairs that had hundreds of companies where you'd get hired on the spot, to then job fairs where there were like 5 to 6 companies and people were begging them just to come and show up. So you saw that huge extreme, and it was funny because the folks that were saving their money and not kind of spending it so frivolously were the folks that actually were able then to leverage the downfall and then actually invest up again. But again, 2002, 2003 were happening, and you just can't believe the kind of wide variance of how folks were just like, wow, am I really in this for the right reasons? And it makes you step back to realize it's not just about what you think is success. You have to really reevaluate why you're working so hard and what are you doing with all that capital. Then in 2003, I was like, okay, let me try it again. So then I was part of a team that we tried to make hospitals paperless. We're like, okay, there's a big problem. People die, obviously, but when you go to hospitals, specifically in the ICU and the ER, nurses do rounds every 4 hours. And what they do is they basically write down your patient stats, right? Whether it be oxygen, your blood pressure, your pain levels. They write this down on paper, and at the end of their round, they go and type this into a computer. So because of transcription error, a lot of people die, quite frankly, because doctors don't get the alerts they need. So in 2004, we built this system that was in Sutter Health, Kaiser, El Camino Hospital.
and you're like super excited because now I'm like, wow, I'm doing rounds with nurses. I have so many funny stories. I was doing rounds with nurses where people were thinking that I was the doctor, but I was actually there just to put this new process, a new product in place. But then you also quickly take a step back and you realize timing is so important. In 2003, 2004, there was no such thing as iPhone. There's no such thing as the iPad. So everything was actually very expensive. So when we went to the hospitals and we actually talked to them about this really cool tech that could change and help patient lives, the hospitals in turn told us, look, it's actually cheaper for us just to hire more nurses. Like, why would we want to do this big investment? So then I kind of realized, like, wow, I spent 2.5 years after the downturn, gave it all, and then all of a sudden we're starting to see all this feedback again. Hard to get funding, it's hard to basically do something that you're really passionate about, and then you're like, wow, why am I doing this? So then, again, it goes back to having a great network, having a great community. I didn't want to work for a big company because I saw how it was to be in Nortel, I saw how it was to be in Cisco, and then all of a sudden folks were telling me, why don't you just try consulting? Consulting to me was, again, something I wanted to stay away from just because when you're in a consulting type practice, you're just literally working ridiculous amount of hours and you're not getting that compensation as well. So there was an R&D group at Accenture that basically, for those that know, Accenture has 250,000 people globally. Of that, there's 150 people actually that are focused on really cool technologies. So it's almost an incubator within a much larger company. So I actually got pretty excited because I'm like, wow, I get the fundamentals of being in a large company, but I get the freedom to do whatever I want. So I did that, and from there, really literally was able to travel. So I went to Denver, worked on digital media, I was doing post-production for movies, got a chance to doing big data analytics, was able to build teams in India, over 150 people that were basically starting from the ground up. Going to India for fun is one thing, working there is another. I lived in Bombay for about 6 months. The first 2 weeks, I'm like, wow, I need to live here. This place is amazing. And then week 4 comes in, you're like, wow, I now know why nothing ever gets done as fast as you want it to. A lot of times, when you're working and you're trying to cultivate an amazing team, you really need to find high quality folks. There's a lot of high quality folks. The problem is to get into cities that are very expensive, such as Bombay, it takes 1 to 2 hours for folks to commute in. So for me, I was super excited. I would get into work at 9 a.m. Everyone else trickles in by 11 a.m. Everyone obviously had like a 2-hour commute just to get in. Now it's 11 a.m. and I'm like, okay, what's up? Let's just start working on our product and our project and start doing whatever we need to do. Then 30 minutes later, everyone goes for like a tea break. So everyone's like, okay, let's hang out, let's do a tea break. I'm like, yeah, that's totally fine. We come back, we work for maybe an hour, and then probably 1 o'clock, it's now time for lunch. So I'm like, okay, let's, obviously I'll eat food, so let's go for some lunch. Come back around 2 o'clock, we're working till about 4 o'clock, and then boom, the next tea chai break. And then I'm like, okay, now it's 6 o'clock. I'm like, great, finally, maybe we get the groove now. Everyone starts leaving. I'm like, where are you guys going? Like, I totally get, being social, having the breaks, but now let's start working. They're like, no, we gotta go and get ready for an MBA. Then I'm like, why are you guys getting an MBA? Like, let's focus on this project. Well, no, everyone's getting an MBA. That's what we're supposed to do. So I'm like, okay. So everyone leaves, go for their class, and then I think their class ends around 9 o'clock, and they take the 1 to 2 hour commute back home. So that was happening 5 days a week. So I did that, and quickly realized that you really have to understand the team. You can really try as hard as you can, but you have to also understand how do you work within that pace of life. And it was also a great learning experience because now, whenever I look at building teams, the location is very important, obviously, and then the teams you kind of build and cultivate together is also equally important. I was working with someone who's in Bangalore, who built a team out there, and I'll never forget this moment. It was a female. She was basically running the entire organization in Bangalore. And right when she gets in, they actually don't call her Miss, they call her Mr. And the second thing she told me, which was amazing, is that she finally was like, Vishal, I finally found a way to interview them. Interview in terms of whether it be offshore development, whether it be product, business operations, whatever it may be. And she's like, this is the perfect test. So anytime she would always get someone to interview, she would say, here's a blue pen, here's a black pen, and here's a red pen. Draw me the color purple. So that was her interview question. So the first person would walk around the room, try to see, okay, where is maybe the purple pen's hiding. Second person actually took all 3 colors and put it all together to make the color purple. The third person said, this is purple, tried to convince that black was purple. The fourth person literally was like, just staring, not saying anything. And finally, the last person said what she wanted to hear, which was, there is no purple. So that's a great example. And then she was like, wow, this is exciting, you're hired. And she's like, and then they're like, okay, where'd you get educated? She's like, oh, I got educated back in America, in the States. And she's like, oh, that totally makes sense. So it's it's a really good example of like what you have to endure just because of the cultural differences, right? To get feedback, it's actually super hard, near impossible, especially for her, because of females, it's actually even harder. So a lot of times when those situations happen, you have to figure out the right processes to put in place to actually cultivate the right level where people can feel that they can have innovation and control and get excited, but at the same time also are efficient and actually drive results. The segue into like what's next is really around, what, there it goes. The segue is kind of like, okay, now you fast forward, it's now 2008, and I was given an opportunity to look at what Apple was doing with the iPhone, right? The iPhone just came out in 2007. In 2008, the App Store was launched. And right when the iPhone came out, you get super excited about the device, right? And what's super important when you think about the word passion, it's what really excites you to the point where you can't sleep anymore, right? And once you start having that feeling, so I was in Los Angeles, I was working at Sony Studios, I was doing digital post-production. It was amazingly fun, right? You're actually working on the set of Hollywood, you're meeting all these cool actors, and you're really trying to create what it actually means to distribute film across movies, across airplanes, across television, cable, etc. But at the same time, this iPhone came out, and I was like, dude, even though I'm doing something really amazing, I'm working for someone else. How can I do something on my own? And fortunately, growing up in the Bay Area, I had a lot of good friends who was here. Christian is actually back there as well. So Christian, myself, Sunil, we kind of all sat down, and another partner for Sumit, we all sat down, like, the iPhone's gonna be amazing. It's going to probably do something game-changing. Let's go and let's move forward. And then kind of goes into once you find something that keeps you up at night and also kind of just excites you, then you really have to find that right team, right? For me, when I think of a team, what really separates the team from anyone else, and we've actually been told this many times, it's like, how do you build trust? How do you build integrity? And then right really quickly, how do you get roles and responsibilities that make sense, right? What's fascinating though about the way we worked is all of us are actually really good friends. So there were times when we had disagreements, and it became this huge it was an interesting discussion, because when you're just working with someone and it's just very professional, you can be like, this is the problem, and you just walk away. But what often happens though is, because all four of us were so passionate and we all basically had different roles and responsibilities, when we were arguing, it was huge. It was like, imagine like fighting with your family, right? Because you're like, hey, no holds barred, whatever happens, happens. But what's interesting though about that dynamic is that you get actually even more energized once you kind of solve those problems. So the irony though is that when you think about a team, so first you have to find passion, then you have to find other people that are passionate with you. I meet tons of entrepreneurs, tons of founders who are just one founder, and it's actually really hard, because there's so many instances that I've actually seen where the founder gets laser focused on what they're doing, but they have no one to check and balance them. And as a result of that, you will literally just burn a lot of cash. I mean, obviously that's not the rule, but more than often, that's exactly what happens. So once you found your team, the great thing is kind of lean startup, right? I'm sure you guys have seen this before. But I think what's more important, the way I look at the MVP, it's really, okay, you have your passion, you have your idea, you have your team. What's so amazing in today's world is that you can actually test, you can do so much stuff without writing a line of code, right? And that's what's so different from any other time we've lived in, right? You can just buy advertising on Facebook, advertising on Google. For example, say you want to sell shoes. That's your thing. I have this really cool product for shoes. Without even creating a website or even creating the shoes, you can literally just type in the keywords and buy those on Google, buy them on Facebook, and all of a sudden, if you can actually get people to click on it, you automatically know, wow, people actually want to buy this. Now let me make it, right? So when I think of MVP, which is like the minimal viable product, it's like how do you actually create the intersection of something that's the bare minimum required? It's actually not even a product anymore. It's almost MVI. What's the minimal viable idea? And then once you have that idea, keep testing and keep thinking about it and keep iterating it so you actually can get something out there. Kickstarter is a great example. I have a lot of friends who are on Kickstarter because they either want to write a book, they want to do something really amazing from a product perspective. There's this whole group of what they call artisans, where you're doing something because you love to make tea. You're doing something because you love to make art. You're doing something because you want to do something on demand. You want to create a marketplace economy. So MVPs are just something that's super exciting now, but you shouldn't be limited. Like, I hate people when they're limiting themselves because they're like, oh, I don't know how to code. Oh, I don't have enough capital. Oh, I'm just really busy. So everyone keeps giving me all these excuses for why they don't do something, and I find it so fascinating to me because we've never lived in a time where you really just have to be passionate, and then you just gotta type in some stuff on Google or Facebook and then run it and see if anyone cares. And if you have people that listen to you, then you actually have validation, and then go and build it. And then you actually can see something that's pretty amazing. So after you have all of that, right, the next thing people always care about is growth. right? So it's kind of like, what is your Trojan horse? For me, when we were looking at kind of mobile advertising, our kind of Trojan horse was analytics or data, right? People were downloading apps back in 2008, 2009. No one even kind of understood what it meant if you downloaded an app, right? You had Flappy Bird, Angry Birds. There were so many different types of games. We had some publishers in our system making $50,000 to $100,000 a day, and they didn't even understand why or how, right? So just understanding what is it that's going to make someone download and use your app or download and use your idea becomes that Trojan horse for something even more amazing, right? So I think if it's a product, who are your tastemakers going to be? If it's your service, who are you going to give it first to your influencers to actually use it? Going back to whatever your minimal viable idea is, so then you can actually start testing it, keep innovating it, and then of course the big question people always ask you is then, okay, how are you actually growing? Because if you don't have that growth, then you quickly realize that you need to iterate and change it to something else. And again, what's so exciting about the time we live in is you can tell really quickly if it's going to work or not, right? So going back to the shoes idea, we thought of some really cool shoes. We launched on Facebook. We figured out the segments. So Facebook even tells you the demo data of people that actually clicked on it. So you know if it's broken down, where it is, location, gender likes it. And now you have this huge acceleration. So you already have growth, so you can tell. Or no one clicked on it. You're like, all right, cool. No one cares about my idea. But you barely spent any money to even do any of these testing. So you should then iterate on something else. But again, it goes back to what's your growth function. So then after you care about growth, then of course the next thing is then how do you make money? It's very interesting because the making money part is something that's very, very important, but also very, very hard. And what I mean by that is that there are specific kind of milestones in a company's growth where it's important to make money, but there's also specific points in your company where it's actually important to have growth and engagement. And the rule of thumb right now is if you're a consumer app, growth and engagement is the most important thing, right? And if you're a business-focused app, then what's the most important thing is understanding how you can create recurring revenue, right? So revenue makes the most sense really quickly for your enterprise or business, but if it's consumer, the business and the numbers and making money comes later. But what's so funny is that, again, when you're looking at kind of funding, and we'll get into what that really means, you then have to really think about where in that curve and what your idea is doing and how that actually kind of percolates back into making money. At the end of the day, there's not enough companies thinking about making money in a quick enough time, but at the same time, if you think about it too early, it actually limits you really quickly in terms of actually growing your business. So then the other big thing is it's really around kind of investors. When you look at kind of investing, it's really around how do you want to do it. And what's so interesting about investing is that the marketplace has changed so much now for investing. And what I mean by that is, take Rotimatic, great example. I'm finally going to try some, by the way. It's a real product that works. It's fascinating to me, right? They became viral on Facebook, became viral on Twitter. They're literally getting hundreds of orders a day. They're having to turn down orders. And what ends up happening with them is they have so many credit cards and so much customers right now that inspires them even more. So they have so much capital that they actually don't even need to get investors. But because they had so much capital from consumers, they actually now have such an easy way of getting investments. And because they have so many consumers and credit cards, the valuation they're at right now is exactly really high. So you really have to think about what your valuation of your company is. And the sad part is that valuation is completely a function of what your growth strategy is. So if your growth strategy is consumer, then investors are going to value you on virality coefficient, how many users you have, what's the engagement level, what's your churn rate, what's your attrition rate, what's your growth strategy, how big you want to get, right? That's all the consumer. If it's business, then it's about recurring revenue. If it's a SaaS model, who's going to make money, how are you going to make money, and what's your margin to actually run the business? And then if it's a marketplace model, then it's all about margin and arbitrage. And then how do you grow supply and demand? And then what comes first? Do you focus on the supply part or do you focus on the demand part, right? So Uber is a great marketplace. Airbnb is a great marketplace. For other types of kind of business, I mean, there's so many different types of businesses, but an investor at the end of the day normally will always look at how they can make more money, right? Now, obviously, you have angels, then you have angel lists, you have syndicates, but it's very interesting when we kind of looked at investors in the beginning, it's actually very hard because either an investor really loves you and trusts you, then they'll just give you money fairly. I mean, they'll believe in your idea, but they're going to give money because of you, because of the team. Or you have a proven business model that's actually working in a multi-billion-dollar market. They're like, all right, you guys actually are doing something amazing. We're going to give you money. Or it's going to be something that you have really amazing IP around because it's a hardware play. But if you don't have any one of those verticals, what will end up happening is an investor will say, okay, you're probably valued at $1 to $2 million, here's $500,000. So they'll literally take a huge chunk of your company very quickly if you don't have either A, an amazing team, B, you're working in a huge market that they can evaluate and that you're actually understanding how you can take 10% of that multi-billion-dollar marketplace, or you have the hardware to prove it. And if you don't follow any of those three buckets, from what we've seen, like the valuation, you literally get hurt so quickly, so fast. I mean, it's exciting. You're like, yes, I just got $1 million, but wow, I just gave up 60% of my company. And then you're going to be working, for the next 5, 10 years. You'll finally exit maybe after doing A, B, and C rounds. You might exit for a big number, but at the end of the day, it doesn't really matter. Your value back to yourself is very minimal. So for us, when we actually went, our personal story for me, it's more. In 2008, when we were starting Marketplace, we went to the investors. No one believed in ad tech. Everyone's like, dude, no one cares about advertising. And then they actually told us no one cares about mobile apps. That's what they told us in 2008. But because we had an amazing team and because we really believed in it, we basically asked all our friends and family. So we lived off credit card debt. We literally had to beg, borrow, and steal just to get us to where we were at. And then finally in 2009, AdMob was acquired by Google, and then Quattro was acquired by Apple. And you have over $1.2 billion of M&A spend. And then at the end of 2009, all the investors were like, oh my gosh, advertising applications are amazing. But it's because they got those two use cases as an example, which was kind of discerning to us because they're like, wow, if you just believed in us in the beginning, we would have totally not had to work or kind of live off credit cards. Like every day we're like, wait, do we pay employees? Do we pay publishers? Like, how does it work? So you really have to figure out how you structure your company. So when you take on investors, is it all common? Do you want to do a seed round? Do you want to do an angel round? I mean, there's so many different intricacies to taking money and capital, but you really have to figure out how you want to do it. So for us, we did friends and family round, and then because mobile was just taking off, at that time mobile was zero. Now it's worth like $400 billion. And then for us, you fast forward and you look at 2010, we basically were confronted. We're like, okay, we now have VCs that can come to us, or we basically say, look, we actually really believe in this product. We begged for money from VCs, but now do we really even need it? Because if we took a round of financing, all of us would get devalued. And yeah, we'd have a more comfortable lifestyle, but now we're actually generating revenue ourselves. And we've been doing this ourselves, so why should we take more money? So 2010 happened, we decided not to take VC money, and then we got acquired. And what was so exciting about kind of the acquisition was that it was a completely clean cap table, right? We had founders and employees, and that was it. And when a company acquires a company like that, they get really excited. And then we got really excited because then we thought about, okay, how do we really take care of the team, all our employees, and how do we maximize our kind of future growth and vision? So we found a company that was European-based, and then we were US-based, and we got super excited because now we're like, okay, wow, there's actually now a way where we can now take this company to the next level, and all of us now can get compensated for doing that. So we did that in 2010, and then part of the deal for 2010 was an earn-out. I think if we all had to look back, I would probably advise whenever you get acquired, just get the acquisition done, and the earn-out is more kind of a nice to have. For us, we did the earn-out, and then we got acquired when we were 80 people, and then the European company was called Velti. It was at that time 400 people. So we got acquired, then I became CTO of Velti. So from 480 people, the company grew to 1,200 people. So we were 1,200 people across 35 countries. Literally within a few months, I had about 750 people reporting to me with 10 direct reports. So from 2010 to 2013, I was traveling like 90% of the year. I had teams in Chennai, in Bombay, in Athens, in Atlanta, in New York, London, Beijing, Shanghai. Every day, like every 2-3 days, I was in a different country just basically helping understand what products we have, understanding what cultural differences there are. And every country and every culture, there's so many nuances in terms of how you can actually grow and breed efficiency. But at the same time, you quickly realize that your job becomes more operational, and you have to take a step back and realize, are you enjoying what you're doing? So then in 2011, all of us kind of took the company public, which was super exciting, right? Rang the opening bell. But then really quickly you realize when you're a publicly traded company, there are a whole different set of nuances that you don't have to worry about. So before it was, you're very passionate about your idea. You're very passionate about the team you're working with. You're very passionate about value that you're generating because you really believe in the idea. All of a sudden when you're going public, you now actually care about shareholder value. You actually care more about what the public thinks about your company than what you think about it yourself. And it's very interesting. It's a very different dynamic where you're talking to folks that are running multi-billion-dollar funds, and they're asking you, what does advertising mean? What is your take on mobile? What does it mean to be analytics? What does it mean to have a data or DMP? They're asking fundamental different questions, and all of a sudden, really quickly, you end up realizing that you have to appease what they think. And every quarter when your earnings come out, you really have to realize, okay, I now have to do whatever it takes to make sure my earnings are the right way. So what ends up happening, and what really quickly happens when a company goes public, what you realize is that if you don't structure it the right way, like a Facebook or Google does, right, which is why they try to maintain most control of the company even though it's going public, is that now you're now focused on figuring out what the shareholder wants the next quarter. And then whatever you promise them is really going to be focused on the bottom line, which is earnings or EBITDA or whatever is going to make them more excited. And at the end of the day, all they care about is predictable revenue. They just want to model your business, and as long as they can predict the growth, then they're going to keep on saying that's a really solid company, let's keep buying it. The minute they can't predict the growth, and you're not growing at a very alarming rate, then they're like, oh, we're neutral, and then the minute you lose, you start kind of messing up with your numbers, and they're like, oh, this is just definitely a low stock. So what's so fascinating about the investor community when you're in a public market, they're more kind of following what your trends are from a model that they actually have to mathematically create in Excel. But if they can't model it on a vision or in a dream, then they're like, okay, you know what, let's pass on it, we'll come back. So really quickly, we realized that yes, an IPO is an amazing opportunity to grow a lot of value, so you can actually do a huge growth for a company, which is why a lot of them do it. And there's of course SEC reasons where if you just grow too big, you have too many investors, you have to go public. But you should avoid it at all costs unless you really have to. And if you do go public, then you really have to make sure that you maintain complete control and autonomy. Otherwise, you're just literally a victim of whatever the shareholders want, which then changes the dynamics of the company very quickly. So then in 2013, all of us felt, so for me personally as well, that the company was well staffed. All our original team members were really well taken care of. Everyone had a home. And for me, I was like, wow, this thing was an amazing dream. But at the same time, I'm not sleeping. Every day it's like a different fire to fight. And then towards the end, we kind of ramped down everything. And then the four of us, the four core founders, we all just basically left. And we took 2-3 months off. And really then just kind of focused on, okay, how do we actually go talk back to our family? How do we create our friends again? Do different things with kind of focus on health and passion, for everything from like doing a talk about our getting electrocuted by 10,000 volts and meeting other folks. And then when you fast forward to 2014, we basically wanted to realize, okay, what's going to be something more interesting? So then we kind of moved to the other side of the table. So we spent 2014 really evaluating startups and other entrepreneurs. And really getting excited by meeting all these people, right? You're like, wow, we were exactly going through what you guys were doing in 2008. We completely understand what was going on. And we started investing in companies that we either believed in the idea, we either believed in the team, or we believed in the product. And very quickly when you start zooming out, you're like, wow, this is so much fun, but you actually, it's very different because you're just investing it and you kind of have an arm's length relationship. Yes, and you're always thinking in your mind, you're like, all right, you're an investor, you can actually help out much more. But if you help out too much, then you're like, well, I'm not getting enough equity to help out this much. So as an investor's opportunity, it's very unique because you want the best intentions for a company and you want to network them and introduce them to all the right people. But if you help them too much operationally, then you're like, okay, well, I might as well just then work for the company. So you have to kind of figure out what the right balance is. So we did that in 2014. Some of the investments were amazingly doing well, like Zenefits, Instacart, Dr. Cronin, like those 3 companies they're just doing phenomenally well. And it's so exciting to kind of see what the founders are up to and see the market literally grow from becoming, all 3 of those companies essentially unicorns. So like 2 or 3 years, they're like multi-billion-dollar companies. So you're seeing that right in front of you, you're like, wow, this is amazing. And then we're like, okay, 2014 kind of we're moving towards the end. And what we started realizing is, okay, what are our new passions? So alongside investing, we started looking at different ways of following what we're passionate about. So we kind of went for 6 months on this whole like Bitcoin thing, like what is it up with cryptocurrency? Then we looked at this whole thing around marketplaces. Then we did a whole thesis around like medical 2.0, like what does it mean to have doctors on demand? Then we looked at the influencer space. So we kept on looking at 6 or 7 spaces. So again, like the whole kind of theme behind that is how do you keep doing a lot of research to really figure out what excites you? And the only way you can do that is research yourself, ask a lot of people, go to the conferences, spend a lot of time, and really just immerse yourself in that space. And that's what we did last year. And out of all of that, what kind of really bubbled up, and then, so what we've done is we launched an incubator, it's called Team in Residence. So, this was really about thinking about investing for ideas, and then we were thinking about, okay, how cool would it be if we could invest in our own ideas, incubate them, get them to a product market fit, and if once we believe it's a product market fit, let's just spin them out. So that's kind of then what we're trying to do now. So team in residence is really about investing and incubating, and then once we really believe in something, we go and spin it out. So the first company that we're just super excited about is called Captivate. That's where I've been spending most of my time. We basically believe, like, the whole quick one-liner is like, I love disruptive technology, and if you talk to anyone who's like 17-year-olds plus, everyone's on what? They're on Snapchat, they're on Instagram, they're on Vine, they're on Facebook, they're on Twitter, they're on Meerkat, they're on Periscope, and what's so fascinating about them is that there's more engagement than the Grammys, than sports. It's basically the most engaged medium right now, most engaged channel, is what people are looking at on Vine and Instagram and Twitter. Just yesterday, actually, there was a celebrity kind of concert where it's someone that probably a lot of people in this room won't know, like Nash Greer is an example. But if you tell Nash Greer to like a 17-year-old, they think it's Tom Cruise, right? They think it's someone that's amazing, has huge amounts of following. We went to a concert yesterday, and it's completely ridiculous. The crowd was louder than the actual basically performer. You just have so many fans, and if you can just go to one of these events, you quickly realize how different media consumption is and creation, right? And people are spending now their time. I mean, I talked to a lot of people. They're like, yeah, I get most of my news now from Facebook. I get most of my news because I'm liking and following things. I'm actually spending a lot of time whenever you sit down on your phone. I always love to see what people are doing on their phones. I kind of like just glance when you're like on public transportation or you're wherever you're walking around. And you quickly realize people just kind of glance. They click on an app, open it, cycle through it, click on another app, open, cycle through it, click on another app, get a message, get a phone call. Everyone keeps going through this whole kind of ADD type thing. But what's really fascinating about all of that, though, is that really quickly you realize that for us in 2008, what got me really excited was apps. Now what's getting me really excited in 2015 is our influencers, right? So influencers are becoming people that are really captivating you. They're captivating the folks that, if you talk to a 17-year-old, get them super juiced up about something, guess what? They'll tell their parents to go buy it, and 90% of the time, their parents will go buy it. So that demographic is really susceptible to some amazing type of either A, marketing, and B, content that we're just getting the tip of the iceberg for. And that's why a lot of people are looking at how to redefine media, how to redefine consumption. So that's kind of the big thing for Captivate. The second thing, which is a fun little thing, is called Home Film. It's kind of like it's a social experiment. What I find really fascinating is how different social communities come together. So there's, for example, sure, everyone here is Stacy, they all know about Shadi or Jeevantaki, all these companies. Like Shadi is a good example. It's a $150 million business. Every time I talk to someone, they hate the website, but there's actually nothing out there that's actually competing with them directly. We haven't officially launched it. It's completely in beta. And already we have 8 to 10,000 users that are actively using it. It's full of bugs. There's nothing to be proud of yet. But it's just an example of something that we just had a cool idea, created it, launched it, and then see what happens, right? So I guess that's something that I'll always try to inspire people. And the last thing that I'm working on right now, it's called Novus. And what's interesting about it is that a lot of people that when you guys go to different conferences are interesting. It's like a double-edged sword. You go to a conference, you end up going to all these meetings and discussions, and you're like, right, was this really amazing? Why am I spending all this money to come here? What you quickly realize about the conference isn't about the conference, the content, it's really about the people. You're actually there just to network. And what ended up happening is I would go to like Davos or go to these amazing things like Summit. I'd go to these amazing conferences, and 80% of the time, the people I meet are actually from the Bay Area. And I'm like, wow, I'm in Dublin, Ireland. I came all the way here just to meet people from San Francisco. I'm going over to like Sundance, people from San Francisco. I'm going over to places in London, I'm meeting people from San Francisco. So I'm going to all these conferences outside the Bay Area, yet for some reason there actually isn't a Bay Area conference that's focused on cultivating amazing, eclectic people together. And that was the culmination of Novus. And that's something kind of actively working on, right? It's like, how do you put great minds together? And it's in the Bay Area, so you don't have to leave the Bay Area, right? Because I don't know why we do that all the time. Like that, there's just so many different opportunities. I mean, we live in a place where I know tons of people are moonlighting, where they're working on a project, they're doing an on-demand type idea. I know folks that are doing like on-demand photography, they're doing on-demand chai, they're doing so many different things in San Francisco. It's like a huge test bed of ideas. But I guess more than anything, what I've realized is that we actually truly do live in a world now where you can have an on-demand job and then at the same time really experiment and follow your passions. And if you don't have your passions, you can follow someone who does, right? And then be part of that team that can do that, right? So I know that's kind of what I wanted to talk about. I don't want to spend too much time. It's only 35 minutes. So 35 minutes of that, but I wanted to keep it more just discussions with the folks here because, A, what are you guys looking to do, and then B, like, what are some interesting discussions we could have? Because I think that's kind of what makes it exciting.
So you said now that you're investing, you're focusing on kind of 3 main areas: the idea, the team, and the product. What have you found to be the most successful in terms of returns?
So that's a great question. The most successful is going to be the idea team or product that's focused on the larger market. And what I mean by that is that I meet people that are in, I just got a really cool deck for a company that's trying to upset Velcro. So if you look at skateboards as an example, a lot of skateboarders spend, if you're a skateboarder, which I'm not, but if you are a skateboarder, you're literally going through shoes every 2 weeks because what's on a skateboard is actually sandpaper and it actually just completely destroys your shoes. So what they did is they spent the past 4 years on figuring out a new way to actually figure out grip on your shoes that actually doesn't damage your shoe. So when you look at something like that, that's a product where you've spent a lot of research on, but then you have to believe in the team to execute that. And they've gotten a ridiculous amounts of kind of partnerships already. So that's an example. However, on the flip side, I've also worked with a company where it's one founder, and they've pivoted the company about 7 or 8 times now. And then you're like, okay, wow, is this going to finally even work? But at the same time, what's going to get the most return? Probably a company that's going to take something that might not be as sexy, but the business opportunity is like $30, $40 billion. But they're just doing something that's they just take 10% of the market. That's $4 billion. So you have to really kind of balance between what excites you, and I guess long-winded way of saying it's not one of those verticals that make it a successful business. It's really the market you're in and the percentage you want to dominate. It's much harder to be. I want to play in a $1 billion market and then own 100% of it. That's not going to happen. Unless if you want to be in a $1 billion market, you'll pay 10% of that. That's only a $100 million company. So you have to really figure out where you want to play, and then once you do that, then you kind of figure out. Like, for example, money remittance. I was super excited about bitcoins. Money remittance is a $500 billion market. That's just exchanging currency. You're taking dollars to like pesos, dollars to rupees. India, you're doing $70 billion a year. Mexico, you're doing 65. China, you're doing 45. I mean, Western Union is getting 15% just to do money transfer. It's ridiculous, but that's a great place to get disrupted, right? If it's $500 billion and you're like, oh, I'm going to just solve 1% of that, 2% of that, it's a huge market to solve. So you have to figure out what excites you, but also realize that if you're going to a market that's much smaller, when you look for an investment round, they model that as huge risk, and then they're going to probably take most of your company to give you some seed investment.
Thank you for an awesome presentation. My name is Jay. Originally, I'm from Nepal, but I live in Sandaman area, and really thank you for putting this program. My question is, you're right now working on 3 new ideas, and so like, how do you focus your time? How do you divide your time to get all these 3 companies working from idea to IPO or maybe success level?
That's a really good question. It's basically how do you multitask? It's actually really hard. I haven't found one way of doing it successfully, but I will say what does help is if you can really partition each day to focus on a specific area. So what we've been doing now, which has been more successful, is you look at 5 days of the week. 1 day of the week, we're going to be focusing on meetings. So, because meetings, if you let that happen all time, all the week, it'll actually literally eat up your entire schedule. So we try to focus 1 day on meetings. 1 day we focus on company culture. 1 day we'll just focus only on product. 1 day we'll focus on business development, and another focus on sales. If we can create themed days, that's actually been really helpful to us. What we were doing before was we were literally doing everything, whatever happens in real time at that day, and you actually are getting inundated so quickly, so fast with all these things that you actually don't see progress. You are making progress, but you're doing so many things at once that incrementally it's actually not meaningful at all. But when you just focus and you say, okay, you know what? I'm only going to talk about product. If you're going to talk about sales or anything else, it's just going to wait for a few days. Because when you're starting a company, everything is the most important thing. Everything is urgent. Only you can figure out how to position that correctly. But you have to do it. You have to figure out what works for you. But that's what works for us right now. And it's actually doing really well.
One of the biggest challenges one of the things that I come across is folks are working full time. They're engineers or they're doing something else, currently have a full-time job, but there's an idea in their mind, and they want to figure out a way to start working on that idea. What's the best, suggestion or solution for them as to how do they make time between a full-time job and then transitioning out to a startup?
So I had a full-time job. You basically have to, if you're in a relationship, they have to You have to understand what you're kind of doing. First of all, that's very hard. But if you're not, irrespective of that, it takes a lot of sacrifice, quite frankly, unfortunately. You know, if you don't have the luxury of quitting your job, you're going to have to basically do it when you're then off, right? So I know a lot of people who are, it's kind of interesting, a lot of people who are very successful, just very driven, you actually end up realizing that you tend to actually overwork yourself at your job. You'll be surprised that if you just reduce potentially your work effort by say 20 to 30% and then potentially do it to another idea, you'll realize that your day job's actually doing totally fine. Because there's the whole 80-20 rule completely applies to work, right? 20% of your job, 20% of your work ethic goes into 80% of your value, and then what stresses you out is 80% of your, 80% of the job you put in stresses you out. So, ironically enough, you can reduce that in some way, and still be fine at work. You're not going to get fired, and then spend the rest of the time you're able to then get from that to then follow it. But again, it takes a huge toll on your personal life. There's no question about that.
I have a question, kind of a partner to the question you asked earlier, and it deals with what you're talking about limitations, like don't limit yourself, plus disruptive technology, and also if you're not currently, if you're currently employed and you're trying to work on something, I guess how do you think about things? How do you go about like telling yourself there's no limits? So you're working a full-time job, you have an idea, something disruptive, something big, but where do you start? How do you cultivate that?
Oh, that's a good question. I think there's so many different ways of answering that. I think the 2 or 3 things that come to mind is you actually be pretty surprised now. I've actually met a lot of folks who are doing some on-demand type job. So we live in this cool world now where so many things are on-demand, right? Whether you can do Instacart, Postmates, you can work for Uber. I met an Uber driver who was doing Uber as well as then renting out 2 of his rooms on Airbnb, and that alone was then paying for his mortgage, and then he was able to then focus on starting a company. So anyways, there's interesting things you can do from an on-demand perspective to then potentially free up more time. Granted, it's not going to be comfortable living, but it's kind of the bare minimum you need to be sustainable. But that's one stream. But then to answer your question, Rob, it's really around, for me, like when I'm looking at something that I have no idea about it, but it seemed exciting to me, I think the easiest way is to find, no matter what it is, if it's big enough, there's going to be a conference around it. Just to go to that, right, and figure out what that is. And then if the conferences, like some of them are just ridiculously expensive, you can just stay at that hotel, for example, and then network. Because most people don't go to the conference for the conference; they'll just go there for the network. I know actually a lot of friends. Like great example, South by Southwest. So many amazing opportunities are coming there from like film, music, and technology, where people don't even buy tickets anymore to the conference. You just go there, and you have to know what hotels to basically be around. And the amount of folks you can just meet there is simply amazing. Sundance is another good example. Sundance is really kind of that tier 1 group of folks, and people actually don't even go there. I mean, there obviously people are going there for the movies and films, but there's actually now a large amount of people that are going there just to network. So I think figuring out your network is very important. The second biggest thing is LinkedIn is just ridiculous now, amazing for both figuring out. So for example, is like say you want to get into something, you found like the top companies that are involved in that space. Just go to LinkedIn, you'll find them right away, and like probably 80% of the time, they'll respond back to you really quickly. And I know a lot of people who are just doing that when you want to hire someone rock star, sales, engineering, whatever it may be. So what's so exciting about, again, where we kind of live in, all these people are just so accessible today. And then of course the third thing that I've seen people do is they're just doing straight up advertising. So if you want to learn about something, just put ads on it. And then the people that click on it actually will then give you their email address, and then you can reach out to them really quickly as well. So there's like, so I would say conferencing, and if it's too expensive, don't attend, just go there. Second thing I would look at is LinkedIn and figure out kind of where it is. And then the third piece is then looking at advertising to attract that person you're looking for.